every single time it feels like I turn around, we have CPI coming out. It's crazy. Like the markets are like just going so fast, and it's like we're doing so much. There's so much FUD. There's so much craziness, and then we turn around, and then there's literally, another roadblock. So it was DeepSeek, and then it was inflation scares, and then it was tariffs, and it still is kind of tariffs. And here we are again going into this week, and we have Fed Chair Powell testimony on Tuesday at 10 a.m. Eastern. We have month over month, year over year CPI. Then we have inflation rate month over month, year over year. That's all at 8:30 on Wednesday. So that could be a giant nuke, obviously. It's expected to uptick on CPI by 10 basis points. And then the inflation rate's supposed to come down 10 basis points month over month, and year over year it's supposed to stay the same. Year over year on CPI is supposed to stay. It's supposed to stay in line. So yeah, it's supposed to stay in line from last year. And then we have another Fed Chair Powell testimony, and then PPI month over month, and then retail sales month over month. So yeah, Wednesday's a big day. Obviously, Wednesday's a big day, and let's just hope for good CPI data. We need good CPI data. I don't want another, nuking of the market. We've had 2 gap down Mondays. I don't think we're going to get a gap down tomorrow, honestly. There hasn't been anything. This week's going to be another crazy week, though, because Trump's talking about, tariffs on EU potentially. So I don't know. That and CPI, just going to have to be careful. I have those hedges going until Friday. So I'm going to most likely keep those hedges until Friday and just let them play out. And if I lose all that money, I lose all that money. It's a hedge for a reason. A hedge is not to honestly make money. It's to basically limit downside. So when I put on those hedges, I'm basically making sure I limit my downside because I'm 99% long. So as 99% long, I'm trying to limit my downside. If we do get a bigger pullback, if we do get something more severe, then yes, the account's going to be down, but I'll have those puts that I can cash in on, raise some capital, and then move that on over into the positions I want to. Well, we got a bunch of earnings coming up this week. I'm just going to go over the ones that are probably most important to the overall economy and overall my trades that I'm in right now, and that some of you guys are in the community. So McDonald's, don't really care. Monday.com is important just because it's a tech service name. And then we have Shopify. Obviously, we're in Shopify. I do actually plan on holding my position through earnings for Shopify. I'm possibly thinking about doing a hedge with Shopify, meaning because I'm so long on it and I have options long on it, I may do a $2,000 to $3,000 hedge, like a put, just in case earnings go against me. I don't believe they are. I believe they're coming back into a really good place in the economy, and everything's kind of getting into a better place overall. And their growth is going to reaccelerate. Their growth started dipping a bit, and I think their growth is going to reaccelerate, and that's going to be a big driver for this name. And we've already seen a lot of these tech service names start, like, they're reporting really, really well, and it's getting received really well because they're not the semiconductor names, so on and so forth, right? Or they're not big cap or Mag 7 names that have really ran a ton. These names are, just getting started back up, to moving higher. So yeah, holding in earnings is obviously dangerous, and it's something that you don't know. I mean, they can drop. You saw what happened with Cloudflare and Net. I mean, obviously we weren't in that position anymore after we sold out due to valuation. You know, we can kick ourselves in the butt because it moved 20% afterwards to the high side, but you know, I didn't believe the valuation was there according to my spreadsheet, and so you know, I decided to exit. Right. What I should have did actually with that was just move it to a tier 3 position. Tier 3 position, remember, is basically a you know, it's very limited fundamentals and mainly just technical analysis. So I should have just did that, but you live and you learn. So Shopify is huge. DoorDash are no longer in, so I'm not really worried about that one. Supermicro, don't really care. Upstart will be big for SoFi. Need Upstart to come in and report good numbers to show that, to really bolster that. Anthony Noto for SoFi, the CEO, kind of came in with you know, very conservative guide, and you know, a firm already came in with really good earnings, and if Upstart comes in with good earnings, then people are going to sit there and be like, okay, yeah, he's just sandbagging earnings and sandbagging guidance. So then we should see SoFi start to move. Don't care about those. Reddit, don't care. AppLovin's another important one just because it's a technology service company. Don't care about Hood, Dutch Bros. The Trade Desk is another one because it's a technology service company. Obviously, Datadog is going to be big because we're in Datadog. Again, I expect good earnings from what I'm seeing. I plan to hold through earnings, and again, I may just do a hedge, a small put. That way, if we do get, you know, just obliterated on earnings or something like that, then we limit the downside. Coinbase, don't care. Twilio, I don't even really know what Twilio does, so I think they're technology services as well. Airbnb, I think Airbnb is really undervalued, so I may look at getting in a position in that after earnings. Palo Alto, PanW, that's obviously the biggest competitor to CrowdStrike. They're one of the biggest names in cybersecurity, so that'll be crucial for them to come in with good earnings to keep the momentum going in technology services and the cyber name that we're in, which is CrowdStrike. Besides that, not the biggest of weeks. Last week was probably the biggest week for earnings, obviously, and yeah. So real quickly to go over the markets, because I'm already getting long-winded. That's who I am. So looking at the Qs on a weekly, and we'll look at the Qs on the daily. First, we're going to look here on the weekly. You see at the weekly, we had this ascending triangle pattern right here. And with that ascending triangle pattern, we have these measured moves up to 560 and 580. And we are still waiting for those to play out. I think it'll play out, you know, in these next few months, honestly. I really do. And, you know, you create a bull flag here, and you broke out of the bull flag. And then these 3 weeks right here are obviously the scare with the inflation, the scare with the tariffs, the scare with DeepSeek. So you see we broke out, and we've just been consolidating sideways along this breakout area. And then we have this other, you know, kind of bull flag-ish kind of thing forming, I guess you could say. And once we break out here, I think then we'll be on the up and up. And you can see it a little bit better when we drop down to the daily chart here. You see that we have this bull flag right here, and then we broke out, and then we dip back. We broke out, we dip back. We broke out, and now we're up here. And you know, we could come back down here, but again, I don't think there's going to be a Monday gap down session again. So I believe we're good. I believe these will hold. The 9 EMA and the smoothing line will hold this time. This volume shelf will hold this time. And when you see we're in an uptrend on the Williams percentage range, and I think we'll just continue up. I think a lot of people are getting bearish, and a lot of people are expecting us to drop down. this week on Monday again. I'm sure I wasn't the only one to put in puts, but I didn't put them in on Friday. I put them in on Thursday because I knew, and I talked to Mustafa about this. I literally said last week, I was like, Friday is not going to be the day to sell. Thursday is going to be the day to sell into momentum and into strength. Thursday would be the day to sell, not Friday, because everybody's PTSD from the last 2 Fridays, because the last 2 Fridays we've just been decimated with Monday morning gap downs. Looks like we're good. Looks like we're good this Monday, tomorrow, but you never know. Trump may come out and tweet something, here in the next. Oh, he might be at the Super Bowl. He's gonna be at the Super Bowl today, and he might tweet, something stupid there. I don't know, but what I do know is whether we do drop down here and retest this bottom, symmetrical triangle pattern you see here, or whether we break out, either way, I do see us continuing higher. I don't see anything stopping or slowing down this bull market. I know there's a lot of fear, uncertainty, and doubt, and a lot of people that are, bearish on the markets. People are just being impatient. Patience is everything. It pays to be patient. It's why it's a saying. So you just have a lot of people right now that, we got all this chop. This is just chop. That's all it is. It's crazy chop. I'll say that. It's crazy chop because we have, literally 2 Monday morning gap downs of like 2, almost 3% back-to-back weeks, and then we recover throughout the week. Crash down, recover throughout the week. So yeah, it's a bit crazy right now. There's a lot of FUD and just a lot of chop. But people are, when we have chop, they're just being impatient because they're sitting there and they're just saying, my portfolio is not going up, my positions are up and down, and I'm not making money. We're not really gaining anything unless you've been in like, specific stocks like a Palantir or something like that, right? So, and overall, like we have names that are up and we're making money on, like a Hims or something, and then we have names that are down, like a Salesforce or a SoFi, and it kind of offsets. So we're kind of like down a little bit or break even, and yeah, it's just kind of like in the middle right now. So Qs still look good, and it's the same thing on the SPY. The SPY is the same thing. You see this chop right here, but again, this could just be you sitting here saying, okay, that's just a bull flag, see, right? And then once we break out to the upside, we're gonna be up and away, right? It is possible we break down to the downside, but if you're going to tell me we broke down to the downside, that's going to be really difficult for me to believe, because that means we have to break through this prior breakout resistance, or breakout and support and retest, and then that also means we have to break out of this new one, this new bull flag here. So yeah, I mean, I just think we already had our 5-6% pullback. And yeah, I just believe it's time for us to move that next leg in the market higher. I don't think we're gonna get that more severe correction or anything just yet. Same thing on the SPY. Just broke out, consolidating sideways. We're still above the 9 EMA. We're still above the smoothing line. I'm not really worried as of right now. You see we kind of dip down underneath this, and then we shoot back up. We dip a little bit, bounce. This is the worst one, but this was a Japanese trade crisis, the Japanese carry trade. So that was that massive shoot down. So yeah, I mean, economy's good, everything's good. I don't really see any big underlying issues right now. Still above that breakout area as well. And overall on this IWM, we're still at this cup and handle retest area right here. So at the bottom of this bullish channel, at the retest of the cup and handle, just overall everything's kind of at this like really good spot right now on the Q, SPY, and IWM. And we'll just continue to react to the markets. But as of right now, I think we're going to continue higher, and I think we are going to have that next parabolic move here within the next month. Honest, I think it's going to be this month that it starts, this next parabolic move. Could be wrong, but that's just, what I'm seeing on the charts and how I'm feeling about it. So